What's up, traders? Happy Friday. Thanks for waiting. If you can't tell, I did a little upgrade here out of necessity. I was gone last week and kind of damaged my camera. So, wow, this camera's a lot better, but I've got to figure out how to do an OBS. But anyway, I'm here to talk because, man, this week, woo, man, what an awesome week. I mean, I don't really usually get into politics, but yeah, we're going to talk about a little follow up on last week. What this result in the U.S. elections means potentially statistically to stocks. We're not going to go into the, what I think is going to happen, the bad or the good. We're just going to look at the statistics. But man, Bitcoin, Tesla, bank stocks, everything is up, and wow. And as you guys know, I've been short Bitcoin. Well, excuse me, not short Bitcoin, but I got a lot of positions betting against Bitcoin, and I put a lot of ego into it. And, I've survived in this business for quite a while. And one of the rules that I have employed to ensure my survival is when you're wrong, the first thing you want to do is stop being wrong. So I'm going to work through some of those thoughts and what I'm going to do in this live stream. And then actually next week, I got to make good on some bets with people. I've got to dress up in some outfits and basically have a little bit of an ego check, I suppose. But anyway, we're going to get into it in just a minute. Talk about what I think Bitcoin is going to do. Definitely talk about Tesla. Also, things that are flying under the radar that people don't really think about. Some really boring stocks that have been setups that I've played over the last couple months. We've talked about ended up being beautiful, beautiful technical setups that I want to share with you guys as learning experiences. Tesla is definitely one of them. It doesn't, okay, it matters that Tesla went up, but I want to show you guys the setup earlier this week that is just a thing of beauty, and I want you guys to learn from it, because when you see this, you need to buy. Or sell, but we'll get into it. So hang out for people to filter in after the music, or if you are joining us later, skip ahead. We'll get into it. Do 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 do. All right. All right. Well, I promise I'll get that thing fixed. I like this camera though. This is a much better camera than this Logitech thing that I was using. All right. So we're back, and yeah, we got a lot to talk about. So a thing happened this week. A thing that I talked about last week. I took a little vacation. Again, promises I've made about setting up a live stream ideas account. They are still in the works. I've got to get those things through, figure out which brokerage I want to put it with. But as always, I really appreciate the discussion in chat and the ideas that some of our regular people come and bring to me. Really great ideas off of 50% retracement levels and other things that I like to trade, that I teach. The reason I do these live streams is to teach methods that I think work. But you know what's not working? My Bitcoin shorts. And that's okay, because a lot of more people are going to make a lot more money being bullish Bitcoin than I think that they were going to be doing bearish. I'll talk about that here in a little bit, but of course we want to talk about Tesla as well. That's going to be a big topic. And then, like I said, ideas that you guys have. The reason I like to do these, the reason I do these is to teach, to kind of give back, but also idea generation. And yeah, you guys can see my whole office now. I usually have it kind of cropped together. I've always kind of wanted to get this window in here because this is one of the cool things about my office. So I really like that. All right. So, as always, if you've got symbols to look at, as many of you guys do week by week, post them in the chat. I write them down on a little piece of paper, and if I like them, I will take them. But yeah, man, I wish I could get that transform fixed, but I'm not going to worry about that right now. I'm going to make this really small so you guys can kind of see me, I guess, talk a little bit, but still see the chart. So, okay. Let's talk about the election. And we're not going to talk about what should or shouldn't, or what direction. We're going to leave that out. We're just going to go back. We're going to revisit last week's talking about the statistics, what the statistics mean, or what they potentially mean, and what we can infer going forward, because that's what's going to matter to us as traders and investors. I mean, I've tried to really impress upon anyone that talks to me when they come to me and they say, "Hey, this election's coming up. What should I do?" And my answer's always been nothing different, because market go up no matter what. Believe it or not, the market really doesn't care who's the president. There are some different statistics that we looked at last week, and we're going to revisit those to say, like, okay, well, now we kind of have an answer. At least we're going to go on what we think is the answer. And so let me find that chart from last week. Here we go. So these are the just average annualized S&P 500 performances for the last, we'll call it 70 plus years, okay? Only a couple of president cycles in there because it happens every 4 years. It's quadrennial, as the word is. But if we're going, based on what the numbers are looking at right now, we are looking at a Republican president for sure, and a Republican Congress. So in other words, unified, the same party, president, and Congress. And so from this, we can look at statistics. We just need to look at the Republican president side. So if we had a divided Congress, in other words, if Democrats were to pull out the House between whenever they ever stop counting votes, because, I guess they're just going to keep on counting until they get maybe the result they want. Who knows? Just kidding. But there's really not that much of a difference. But if we look at it, the average performance is going to be about 11.7%. So it's good, okay? What you didn't want is you didn't want a Republican president and a Democratic Congress. That would have been the worst situation for stocks. Now, there's one more thing. Let's see, Investopedia. There we go. So I also looked at this last week that we need to understand going into the next 4 years. So statistically, again, this is just statistics, but I still think statistics are better than just, shooting in the dark. We can kind of learn something from them. This next year coming up is going to be a pretty average, little slightly below average year. Okay. Yes, we'll look at Curiosity Stream in just a second, actually. Thank you for the thanks. And yeah, if you guys have questions in the chat, put them in. By the way, if I cough, I'm getting a little bit of a cold, so bear with me. I think I got it full energy for the rest of the podcast, though. So But really, we only really need to be concerned next year, excuse me, 2026. Okay, so 2026, that's going to be the second year of the new president's term, and the average results are 3.3. Now, of course, you're going to notice all these are positive because what did I say? No matter what, stock market goes up. So things are going to be fine, guys. Things are going to be fine no matter what. And the third year is the best, and so that's going to be 2027. 2027 is going to statistically be the best year. And if we do some really bad math, we can average this together and say that, okay, the third year, and we average it with what it is right here, which actually probably it will be a divided Congress because typically after the midterms, the if you have like a unified one, they usually flip. So we can average that together and say that we're probably going to get somewhere around a 13.75% return in the year 2027. And that's what we can kind of bank on is going to be the best year. And statisticians are absolutely raging at the screen right now because that's just a horrible way to look at that. But yeah, so what do we see going into this? So if let's do some more bad math. So this coming year, 2025, we should have 11.7 down to 6.7. Let's call it an 8%. Very, very average year next year is what we can expect. So yeah, that's really totally useless math, but hopefully it makes people feel better because I got a buddy, and he used to love Elon Musk. And then Elon Musk started getting a little bit sassy with his not his purchases of things, and sassy with his posting on those said things. And he stopped liking that guy. And I said, dude, don't let that affect your portfolio. And yeah, man. So I posted this on my Discord, by the way. I had a lot of people ask me Wednesday. Several people sent me messages that I haven't heard from in weeks or months. That's fine. You guys can send me messages. I love talking to people. But because, I mean, honestly, it kind of becomes a little bit of an indicator as well. A lot of people ask me, okay, what do we buy now? I was like, I really wish you would have been asking me these questions like last week, maybe even Monday, or preferably a little bit earlier in the year than now, because now the market's freaking ripping. And one of the big things the last things that I bought this week before was Tesla. And that's because of this setup right here. So we had earnings. Tesla was kind of really faltering, get down there around 212, just really hanging out. And then on Monday of this week, it hit a 50% of the earnings of the earnings rally. Now, 50% levels are my bread and butter, and I have been for years and years. And okay, we're in the teaching session, by the way, ladies and gentlemen. Actually, I tell you what, let's record this. Bear with me, because this is something I want to put. I want to try to make more content for TradingView and YouTube as well for standalone. So let's do this. All right, bear with me. Let me do my thing where I kind of get myself back in that zone. That's where I want to start. Okay. Come on, TradingView. You're already making me mad with not letting me do live streams anymore. I can absolutely give you my opinion on PayPal, AFG, PFE, and KO. Two of those I definitely own. PFE and KO. PFE cut or Warren Buffett it? Okay. I'll do the video here in a second, but I'll talk to chat for a second. So it's a little bit of a joke. But actually, when I tell jokes, nobody laughs. So just being serious. So a couple days for the election, or actually Wednesday, or when the election results were coming in, I started looking to see. I figured that man, some people are going to be really upset. Some people are going to be having some really bad panic attacks. And if you go on the social media, TikTok, Twitter, whatever, there's a lot of meltdowns out there. And so I started looking. It's like, man, I wonder what company makes Xanax, because I want to buy that company. I want to buy the company that manufactures and sells Xanax. And guess who it is? Pfizer. I'm kidding. That's not that's no, don't buy it because people are having meltdowns. Don't do Schadenfreude. It's not becoming of anyone. I've been in Pfizer since the beginning of the year. That was actually a buy that I put on to start the year, long term buy. Stop below the low. The reason being, lots of lines here, but let's just say it's at a decadal low. I mean, it was basically coming down to the COVID low, which was the level that it has been at since September 2014. And that's once again, levels come and tested. So I don't need to close this yet because I was planning to hold this for a very long time, collect, it was kind of a marginal dividend on it. But if you were to have bought it based on the thesis that people are going to buy more Xanax because of the election, well, that's not really panning out. So, but yeah, I mean, I still like it. Another one that was at a great level, which I'll talk about as well as Intel, is actually the same setup. That setup being in this case, a monthly Tinkinson pullback. That is one of the things I really like when you kind of get a little bounce off of a major low. This is a monthly chart, by the way. And so came back to the level. It should have held 28, but we're going to hold on to that. I'm going to hold on to that. So hashtag not financial advice, but we're going to give it a little more time because had to be patient on Intel. Finally got a good buy on that, and that's ripping from the whole thing. But yeah, still like PFE. We'll look at the other stuff in just a second. Okay. Let me do my video on Tesla because I'm getting a little tickle in my throat, and I want to make sure I get that in. All right. So let's talk about this setup. Now, this is going to be learning. Put your learning hats on because I really want you guys to know and understand it. This is the same setup, by the way, from the week or maybe 2 weeks prior with Citigroup, okay? Again, Citigroup, a spike out of 50%, and Citigroup, like a lot of banks, had a nice little yeet on the election. I'm not quite sure why. If you ask me why did banks go up, I have a friend of mine that will tell me it's because of 10-year yields, but that runs into this place in my understanding of bonds and yields and what that means to the economy that I don't really know. I just know this was a great setup. And again, this goes back to why I love to teach trading, because after many years of trying lots of things, I've finally settled on things that work. That's something I should leave for my video. So hang on. All right. Actually, I made a post. Yeah, I did. Actually, I made a post about, I mean, I really need to get more than 245 people to see these kind of things. I mean, the Bitcoin stuff is really popular, but this was a post I made on Tuesday, the day of the election. And yeah, like I got to get more people to understand. That's why I need to make this video. More people need to understand this simple setup. Okay. Okay. Pardon me. KO fired a short signal. NVIDIA fired a short signal today too, didn't it? How'd the NVIDIA thing work out? I didn't want to trade it. I don't want to short NVIDIA yet. It sounds dangerous to me. All right. Here we go. If you wonder, I can only do this in one take, so that's why I got to be prepped for it. There's no editing. We're doing it live. What's up, traders? The reason I really love to produce content is to teach. And after many, many years, over a decade of trading, there are certain setups that just freaking work. And one of them happened on Tesla before this giant yeet, which, there's something that happened this week. We're not going to go into what it was, but it was very bullish for Tesla. And I actually posted about this Tuesday, November the 5th, because it was just such a beautiful, beautiful setup. Now, I didn't know it was going to do this, but this is the same textbook kind of setup that I take again and again. Doesn't happen all the time, but man, it's a setup I say I have to take. And I'm going to go through each step and why this is the case, why I have to take it. There's a lot of different elements here. I want you guys to really understand what they all are. So here, let's take a look at earnings. All right, we're going to start on earnings of Tesla. This was earnings on Thursday, the 24th of October, and that's where this story really begins. I mean, you could say that the whole story has been developing for a long time, but this is where this trade story begins. Earnings. Because earnings, you had a giant pop. Okay, now a lot of people, when they see that Tesla has good earnings, want to come jump in. I don't do that. I just can't. I can't bring myself to run in because I've seen so many times over the years where after earnings, you get that initial pop, but then if you just be patient, days, maybe even weeks, then you're going to get a pullback. You just will eventually. And really, I want to see a pullback to a level that I really know and trust, and that is a simple Fibonacci 50%. I don't use any other Fibonacci's. I really don't, because they kind of confuse me. I have just a small amount of RAM in my brain, and this just happens to work so much that that's what I only use. Now, another little interesting tidbit that I don't actually look at that very much is gaps, okay? A lot of traders and a lot of teachers will teach about gaps. I don't, because they're kind of rare, but we also had that going for this level at 242.82, all right? But the main thing for me is the 50% level. And so as it comes along, we get to about Monday of this week, which was November 4th, and it did the other thing that I trust and make money off of, which is spikes. Spikes are what I define as price breaking a major support or resistance, and then within the same bar, or in this particular case, the next bar, price recovers at that key level. You know, it can be a high or low, it can be 50%, but you can kind of see here where in the first 30 minutes of the day, this is a 30-minute chart, by the way, price spiked down and then closed back inside. And this is this kind of stuff that I look for as often as I can possibly find it. And this is coming off of a major catalyst, earnings. Again, you got it at this gap level as well. And it's just, everything's just kind of coming together for this setup. Not to mention, you know, when I'm trying to set up the risk reward here, with this indicator I have, which I drew by myself on my own, basically, it's nothing fancy. It just tells me when price does this very volatile move and closes back inside. By the way, if you would like this, send me a message. I am more than happy to give it to you because it's so valuable, and I frankly don't need your money because I find setups like this. This is more fun than trying to charge people for trading and, you know, indicators and stuff like that. It's just very simple, guys. I just want people to have it because it works. All right. And what I'm looking for in this kind of setup, the ideal setup, is for it to pull back to this red line right here, which is basically just a 9-period median of the short-term trend. And we got that on Monday. And then we had that evening of Tuesday, had a nice little pop-up to start, and that's where I made my post on TradingView about this. And so here we are on Tuesday, and a lot of people are kind of like nervous. Oh, what's going to happen? There's something going on in America. You know, Tesla's kind of inextricably linked to what's going to happen or not. So there's a lot of risk on the table. But you know what? If you didn't know what was going on in the world, you would have seen this setup. And you can see this setup a lot, actually. 50%, spike at 50%. Mwah, great. And, well, the rest is history, as one would say. Because we got a nice big E. No way could have I expected it to work out that well. But, again, the key component is really just a setup. Just for example of how common this is, a trade from about 2 weeks ago was Citigroup. And who knows why banks are also doing so well. But once again, 30-minute chart, starting September the 24th up to this high right here. Again, an earnings-based sort of pullback down to 61.65, which is 50% level, and onward. This is another one that I posted and talked about. They don't happen every week, but they happen pretty often. And so I really want to share this with people. I want to make this into a standalone video because I just want you guys to do better. I want you guys to find these kind of setups. And again, you don't need to know what's going on in the world. Really, you don't. Like, in fact, if you thought a little bit too much about Tesla, you might have not taken this trade. So hope this helps. send me a message on TradingView if you would like to have this indicator. Trade wisely. See you guys in the next video. All right. Thanks for hanging out. All right. So
What's up, traders?
The reason I
hang on.
really love. Okay, sorry. Sorry for that girl scream. No. I need a clean chart. No, I don't want all my. Oh fuck. Hang on. In case you're thinking about doxing me, that's my old address, by the way. I don't live there anymore. Ha. I don't want to mess with that screen because. Yeah. Stop it! No. Oh God. All right, well, let's just riff for a second. All right, so let's talk about Bitcoin because that's what I said I was going to do. So as I said, I don't need to bring up the chart. I don't want to look at it. Not right now, at least. Actually, let's do this. Can we continue to publishing? Okay, I'll leave that. All right, here we go. Oh man, so everything really looked like my short was going to work out, didn't it? Didn't it, guys? So I'm basing this on reading social media, and just the constant state all year is you have to buy Bitcoin. Everything else is garbage, and you're going to be sorry if you don't. And I'm sorry. I just think that kind of arrogance and hubris does not get paid off in history. But you know what? That saying that the market can remain irrational longer than you can remain solvent is true. Man, this last week, just that bar right there, everything as a trader tells me that this is going to be a reversal, a double top, a wedge, a something. And then we had a major event that people perceive is bullish for Bitcoin, starting some kind of Bitcoin strategic reserve or something like that. I'm going to be honest. I don't think anything is going to happen political about it. I think that there's a lot of things, not just Bitcoin, that were promised, but what that doesn't actually matter. The market doesn't really move on news. Let me say that again. The market doesn't really move on news. The market moves on the perception or the expectation of said move. When the news actually happens, then you typically have a sell-off. That's where you get buy the rumor, sell the news. But now there's a lot of anticipation as to what the Trump administration is going to do in regards to Bitcoin. There's a lot of promises that were made, and that is why you have this. All right. Now, as I said, I'm not actually like short Bitcoin, but I have BITI. I also have MicroStrategy puts, and I'm also in the MicroStrategy short ETF. I think in hindsight, what I should have been doing is staying long or being, I'm huddle long, but if you take my shorts into account, I'm positioned bearishly. Okay, so I make more. My stack goes up as Bitcoin would have gone down. Okay, and now as it goes up, the stack's still, but not as much. Okay, I'm losing as it goes up, but I'm not losing Bitcoin. Let's put it that way. And so this was essentially a hedge that eventually, as this went along and I gained more confidence in the short, I actually flipped to a negative position. I'm still going into this weekend with a negative position. I got to see, what happens with this week. Maybe I'm smoking a little bit of hopium here, but it's not that far from closing back inside that thing. But if it does, I'm going to be wrong. I'm going to be wrong. And I've been trading Bitcoin for over a decade now. And you know what? There's nothing wrong with being short with this kind of gobbledygook right here, but there is everything wrong with trying to be short with a confirmed all-time high breakout. That's a recipe for just absolute disaster because you don't know. And I put in last week my long-term prediction, which if this thing does get going this cycle, I think the top's going to be anywhere from 145 to 170K. Wow, that's kind of conservative. You mean only twice as much as it is right now? Yeah. I think that's more valid based upon the history of Bitcoin having higher highs, but at a decreasing rate. But the one thing you don't want to do is be short. as it's going up. You don't want to fight it. You don't want to fight it. So I'm not going to fight it. I'm not going to fight it, but my risk is fixed. I'm not open-ended risk there. I think probably what I should have done, see if I wanted to express this position, is be short MicroStrategy, which sounds kind of silly because MicroStrategy has been going on an absolute tear, but it's all based on leverage. And actually, this weekend, Wednesday, I've got to put together a little talk because someone's invited me to present the bear case for MicroStrategy. They're going to be presenting the bull case, trying to get people to buy MicroStrategy, and I'm going to be presenting the bear case. And to kind of give you a little, to steelman the opposite argument about MicroStrategy. Hey, what's up, Beach Bum? Oh, man, commiserate with me, Beach Bum. I mean, doesn't it just make sense, though, to be against all this hype with Bitcoin? It just made so much sense. It still does. But it's the market, man. You've been doing this longer than me. So you know you can't fight it. But BITI is a fixed risk. It can only go to zero. They actually this week had a reverse split, so the share price changed on BITI. It's if you were short, if you were like had future short or something like that, then you have open-ended risk. You don't want that. But anyway, so MicroStrategy is this, and to steelman the case for MicroStrategy, and this is when I say this, it sounds absurd, but proponents of Michael Saylor, because let's face it, I mean, he's kind of put his whole identity behind it. It's his company. Proponents of them say that he has discovered the infinite money glitch. And what that means is, here's the infinite money glitch. So this is the infinite money glitch. One, let's say take out debt with convertible shares. So in other words, they issue a bond, a corporate bond, a convertible bond, where it doesn't pay out in cash, it pays out in their shares. And what this ends up doing is this ends up diluting the share value. Okay, but then what they do is they take that debt, or take the cash from the debt and buy Bitcoin, which then increases share. And they think that they can just continue to repeat forever and drive up the price of MicroStrategy, as well as drive up the price of Bitcoin by buying up all the supply with all this debt. And it's just silly. There's the example I'm going to use in my presentation that I need to go back and find. It comes from, and this is a great book, by the way, Reminiscences of a Stock Operator. I know in that book somewhere, I got to find it, is this story that Jesse Livermore is telling about this cotton trader that tried to corner the market on cotton and bought up all the cotton futures. And then all of a sudden, cotton prices, or something about it happened, and he got blown up. He thought that he could just corner the market. The history of traders trying to corner the market, in other words, buy up all the supply of a commodity. And, Bitcoin is many things. It's not exactly a commodity, but it is something that has a supply, like a commodity would. It seems so good at the time to the people that are doing it, and they blow themselves up. Because I don't believe in karma, but I believe that people can't help but be who they are. They can't help but repeat their plans. And so that's the infinite money glitch, and I've got to speak out against that, because I think, when you get into something like this, guys, I mean, something like this, if I look at this chart and I think in my mind, my mind's eye, my memory about seeing charts like this, I will admit it can go further. I mean, it could very well go up to 1,000 or something like that. But at some point, and people start getting interested in it, every single one of these parabolic charts ends the same way, in a spectacular, disastrous way. You just don't know when. And so I'm really concerned that people are going to kind of drink this Kool-Aid and get invested in it. And this strategy works as long as Bitcoin is going up. And I'm constantly questioning myself, because, if they do buy up all the supply of Bitcoin, if everyone continues to hold it, it will work. And we'll have this asset that just keeps on going up forever. Now, if you talk to the faithful Bitcoin people, they'll tell you that, well, it's going to get to about $1 million Bitcoin, and then it's not going to go up anymore, and that's what I'm going to sell because it'll be clear to me that that's as high as it's going to go, and it will just stay static forever because there's full adoption in the world of Bitcoin, and I will be the new financial elite. I'm talking about the Bitcoin maxis, their perception of themselves, and everyone else will be forced to buy my Bitcoin because they're getting the price they deserve. To which I say, what do you say to an 8-year-old right now? Like, sorry, kid, should have bought Bitcoin. Should have got a paper route like me, and bought Bitcoin by the pennies. When you were 8 years old, because now you got to buy it. And but then it's like, well, no, they can just buy it, and it will continue to go up for them. It's like, well, I thought you said that Bitcoin will stop going up in value, and people will be able to use it as the world currency. Because why would you use money that is going to go up the next day? It's like, well, no. It's a house of cards of ideas and sentiments and narratives. But you know what? Maybe it doesn't matter. Maybe telling yourself a story about why it's going to go up makes you hodl and not do something dumb like try to short it. Well, yeah. Beach Bum. Yeah, I expect to sell the news retracement too. BITI pays a monthly dividend. Let me ask you this, Beach Bum. Why then, is it not on my list anymore? Why? Okay, I'm kind of curious. Maybe you can answer this for me. I do know that. But also with BITI, before this this happened. Okay, so let me bring up a daily of BITI. The BITI, by the way, is the ProShares Bitcoin Short ETF. This has been actually around longer than the actual ETF. So the whole idea that there's no Bitcoin ETFs until there was. So, and I think the answer is going to be pretty simple here. So this actually broke the low, or basically the all-time low of BITI. It broke on October the 14th, whereas on October the 14th, we were still here much below the high. So there's not quite a 1-to-1 on BITI, but I think I know the answer to why this is. I think it is because these are futures based. And for one, I know that we can go in and we can see that futures trade at different premiums. So for instance, the current Bitcoin's futures contract that expires in November, that is trading at, let's see. Right, BITI is based on Bitcoin futures, and so there's probably some math in there, isn't there? Come on. What? BTC. Okay, there we go. So there's probably some math in here. Well, that's interesting. Is this correct? Hold on. This is Bitcoin futures. This is Friday, so futures haven't really broken up the high. I thought that they would have been more. Okay, so that's BTC1. That's going to be the November contracts. Let's see. By the way, with futures, they have an annotation because futures have monthly type expirations. So that's BTC Z24. That's going to be the December. So let's remember this. This is 77240. Come on. Let's try this. Hold on. 1 second. I can put it up on Thinkorswim here. Let's do this. Try this a little bit longer, then we'll move on. Nah. Oh, no, they don't put the 2020 in that. Boom. So that's trading at 77,680. So it's about a $400 difference. And so basically the forward-looking futures, the December futures are trading at a premium. And that has, I think, a lot to do with margin rates. In other words, if you're going to be on margin, which you have to be if you're going to trade futures, they require you to take out a loan, and that has an interest rate. And so I think that factors into that. Again, math. But yeah. Yeah, futures rolling. Yeah, basically. All right. Well, if you guys have symbols to look at, put them in the chat. We'll get to those in just a second. But just kind of put a bow on it. Yeah, I mean, if I'm going to give it to the end of the week, and I'm probably am going to start having to unwind some of these shorts, these bets against it. But that's okay. That's okay. If I look at my portfolio this year, it is gangbusters now as a result of this. I mean, the only thing that's negative is my Bitcoin shorts. Like I said, the Tesla has been doing very well. I don't know why. Maybe someone that's smart about interest rates and banks, the Citigroup trade. And by the way, all these things, people have asked me this week, like I said, after the election, like, what do I buy? And I say, well, my dude, like, I post all these on my Discord, but I don't run a signal service. I'm not charging people for a signal service, and you're not paying me to come out and like, hey, come buy this, because number one, look, I've done that long ago where people ask me what to buy, and I tell them what I'm buying, and then they buy it even though I didn't say to, and it comes. Here's what happens when you tell people what to buy. Okay, it's just something you don't want to do, because if it goes up, now they're going to be asking you every damn day, when do they sell it? And let me tell you something about that you should probably already know about trading. There's this adage, let your profits run. Okay, and so especially if someone's asking what do you buy, they haven't really heard this adage yet, and so they're going to be looking at that price going up, and they're going to be like, oh wow, oh well, I don't want to lose this profit. Oh, when do I sell? Let me ask Mark. Let me ask him. And so that's not only is that kind of takes up my time again, because I'm not being paid for it, but also it makes me have to look at it. It makes me have to look at it, and maybe I'll see something that kind of makes me think also that I need to sell, and that kind of disrupts the whole thing I like to do, which is take a small low risk trade. Like in this case, let's just talk by teaching. Since we've already looked at Tesla, but what I like to do now, and this has kind of become my MO, my method over the last several years. It took me years to kind of come to this, but I want to get into a short-term trade, like a 30-minute trade on a stock, which is the case of Tesla and Citigroup. There's also several others, but we're talking about these. And I want to take profit at the 50% level of. So basically, I started this with a 50%, going all the way up to September. This is Citigroup C, by the way, up to here. And it came back. It triggered me a spike. I look for these every morning at about 10 a.m. See what that first 30-minute did. If it did a spike, I'm going to come look at it. And then I want to get a little bit of profit to basically just get on base. Okay, and I'm going to leave my stop where it is. A lot of people, they ask me, like, do you move up your stop? Do you trail stop? I don't do that anymore. I really don't. Not with stocks. Not in this raging bull market that's been going on for all of our lifetimes. One day, we're going to have another 2008 3-year bear market, but not looking like it now. But for now, you just want to own stocks and own them, okay? I don't even do options much anymore. Yeah, I don't, unless I'm trying to, take them out on, take puts on MicroStrategy. So I want to own shares, and I want to own them as long as I can. And so I get a little bit of profit off of this right here, and then I'm just going to leave it alone. And I don't need to look at it, because maybe when this Citigroup, and I wasn't looking at this. Honestly, I was not looking at this. I mean, it's on my watch list. I kind of have an idea for the price I get into, but this is an example of why I don't do a trailing stop on Citigroup, because Citigroup didn't come back. Actually, it did. It came back first to give me another pullback, and we had a good discussion about this on Discord. I had a member asking me, well, hey, it came back, do you move? I actually got asked about this. Hey, it came back, it came up to here, and now it came back down here. Do you want to get out? Like, shouldn't it have not done? I was like, you know what? The reason I want to buy this initially is because there's a support here. That's the whole premise of it, essentially. And the spike tells me, that price is respecting that. Now, price, if it's a valid support or resistance, can come back and hit it again, confirm it again, and then I could be out of a good trade. And so it hit it once. I took my profit, the 50%. Now I'm not emotional about it. Now I don't have to worry about it. Comes down, yeah, I prefer it to just go, but you don't always get that. But you know what? If someone, I had this discussion on Discord, and so that forced me actually to come and look at it when it was doing this, this earlier this week. Okay, I did, and I looked at it and I'm like, all right, well that's not what I wanted to be doing. I'd rather just, you know, go immediately. But I'm just going to stick with my rules. I'm going to keep it. But you see, what happens is I had to look at it. And this goes back to, telling people to buy or sell. The opposite side is I tell somebody what I'm buying, they go buy it, it goes down, now I get blamed. So this is all just to kind of say, I don't run a signal service because I don't want it to impact my trading. I also enjoy the life of financial freedom where I don't have obligations. I mean, I do this for you guys once a week, and that's about it. That's about it. And I appreciate the people that follow it, but I know that if I wanted to grow this and teach more, that I need to produce more videos like I did. So that's what I'm trying to do. I'm trying. Scouts Honor. Whatever. Yeah. But yeah, banks, guys, up 10%. The other one, Truist Financial Corporation. I've been talking about this. I mean, you guys remember, if you guys have been following me for a long time, I know Jen, you're out there. You guys remember in May of 2023 when banks were going to fail? Every once in a while, one of those narratives comes up. The bank's going to fail narrative was just, I hate to use the word obvious, but I think Bank of America. I'm actually not in Bank of America. I think Jen, that's his pick. Yeah, but it's doing even better. I mean, just guys, like whenever you have the whole world, CNBC, social media, just constantly reinforcing you that something is going to happen, question that narrative, especially when it comes to finance. There's this bank's going to fail narrative. There's the oil is going the way of the dinosaur narrative of 2021. How's ExxonMobil doing? By the way, since we're talking about post-election fallout, I've been getting a lot of questions from people about, I thought I was too late getting into it January of 2021 because I was missing it off the bottom, and all I asked for is perfection. All I wanted to do was catch the bottom, and I felt like I was too late in January, February of 2021, and you're not too late, okay? Intel. That reminds me, getting something off of a bottom. If you guys remember, a couple of live streams ago, talked about how I missed, again, what do we have here? We don't need to look at spikes, actually. We have 50% level. Wow. Oh, just love it, love it, love it, love it. 2159 was a 50% level. Everybody asked me every week, because everybody knew I've been talking about it. Once we had this huge catastrophic earnings in August of this year, everybody's asking you buying Intel, you buying Intel, you buying. I was like, I'm gonna be patient, and then I kind of forgot about it. I kind of I was just getting lazy about it, just because well, look, we're looking at a 21 year, a 21 going back to 2000. Oh, it's not 21 year, excuse me, a 12-year low, because the last time it hit this was 2012. A 12-year low on Intel. And so I don't really need to worry about it that closely, but actually that laziness kind of got me a little bit of trouble because I missed the perfect setup on Wednesday, October the 23rd. But I was able to kind of pick it up in, I think it kind of picked up here it was a Tuesday. It was Tuesday of the next week after I realized my mistake. So I kind of had to hold it through this earnings, and now we're fine. But yeah, that was another one. And again, this goes back to, people that have been asking me this week, hey, what are you buying? I was like, my dude, I have a Discord. I post it in everything chat. I don't post every day. If you ask me a question, I'm going to answer it. But I'm not running a signal service. And so for the reason I said, but if you want to know what I'm doing, I put it there. And really, it's not to tell people. It's more of self-accountability. It's really, am I willing to put this trade? Am I willing to put this investment out for the world? Whoever reads it, if they want to, it's fine. But it's a way to keep me accountable. That way I don't do just dumb degen stuff. Or at least if I do, like shorting Bitcoin, I then have to fess up to it and make changes to my thesis openly and not just stay wrong. So those have been the big pickups for people that have asked me, what are we buying? I'll say, well, in the last, 3 weeks to a month, Intel, Tesla, Citigroup have been the ones, and before that, Lowe's. Yeah, that's again another look, guys. If you look at all these setups I do, they're all the same. They're all 50% retracements of moves like this. So, and Lowe's is doing great too. But this goes back to just the longer term thesis that I'm trying to espouse to everyone. I want to get these short term trades off like a 30-minute, and then own and hold shares in a portfolio, and then just let them go. Let them, and you know what? When we start to hit some kind of a bear market, which we are not in at the moment, then I'll look at this portfolio. But otherwise, I just want to have these things as long as possible, especially ones that are paying me to own them like dividends. Somebody asked me today, and let's get to your symbols here. Now, get them in the chat because we're going to start wrapping things up. But my favorite dividend play, which is, wait, hold on. Is that? Yeah. My favorite, yeah, my voice is going to go in here in a minute. My favorite dividend play is Altria. I mean, I've owned this thing for many years, since 2020. Well, I mean, I've owned it for many years in other accounts, but really in earnest, I've owned it since 2020 and 2021. The reason I got into Altria was back, and I talked about this last week. The reason I got into it was because of pot stocks. Pot stocks, you say? Yeah, because at the time in 2021, when there was all that pot stock fever, I decided that I didn't want to buy things that look like Tilray, look like the charts, the crazy charts and things like that, because I'd rather own something that pays me 7%, dividend yield. Maybe it was 8% at the time, in a 0% interest rate world, as it was, that had just purchased one of a major portion of a major Canadian grower, and I figured that a corporate Altria would be a lot better position to grow and cultivate weed than all these other little things that were going to crop up. Get it? And so I've been paid to hold on to this position. Has it doubled? No. Well, actually, you know what? If I got it in the 2020, I probably picked it up in 2021 around here. So no, we're only up a little bit, but I've been paid enough to hold on to it, and I still like it as a dividend play. Fantastic. Coca-Cola. Let's talk about that. I know that someone put this. I'm long Coca-Cola still. Oh, so Coca-Cola is another long-term 50%, but now it's coming back inside. I'm glad someone pointed that out to me. I don't like this. I do not like that this is coming back inside it. We need to watch this closely because Coca-Cola is cool. It's good to own. You know what? Maybe we just hang on to it. We got to keep a close eye on it. I mean, we never want it to go back below 51.74 again. I mean, no matter what happens. I mean, why we don't want to lose money on it. But we got a good amount of playing here. That's another thing. Stocks like LLY. Okay, LLY came back. We looked at this last week. Someone asked me, what are we doing with this? Because that I've held this for a very long time. Picked it up again back in August, and it came back again. Here's another example of things coming back to a support and holding. Got a lot of lines here. Let's just clean this thing up. Haven't even talked much about volume profile today because I haven't needed to. But this LLY support, which we need to keep an eye on, which it looks like it's survived. By the way, when I do a volume profile, what I'm typically doing is I'm looking at a trend like so, and then that's when and of course we've got it there. And so basically for 775, let's call it, that is the support that the thing needs to hold. We're good as long as it does. Okay. What else we doing? This is another example of a stock where I just want to own it and hold on to it for a long time. Don't need to come back and look at it except when it does a setup like this. Truist was another one of those too. Waste management. This is another stuff. These are boring ass stuff. You know, the reason I bought Waste Management all the way back in, I think probably like 2010, 11 when I started getting interested in trading. And then I would go around my office working in IT and talk about technical analysis. And they would say, so if the price of shit was going up, you would buy shit. I was like, well, I'll have you know I own garbage. So what's another one? Costco. Costco. People ask me, I mean, just if you hold a gun to my head and tell me what to buy, I'm going to say Costco. It has done very, very well, and now that I look at it, have not looked at it this week because why? It just keeps going up there. But do you ever hear about it? Do you ever hear about stocks like LLY, Waste Management, Costco? Do you ever hear about these things? Do you hear about Home Depot? Do you hear about Amazon? Come on now, you guys know about Amazon. I mean, Amazon trade of the freaking century. Anyway, whatever. We'll talk about that. Let's finish up, you guys. Things. Just try to get on base with these stocks. Okay. Dollar cost average. Do what you got to do. Just get on base with low risk, and then just try to get in there. Just try to get in. Let it start showing you a profit, and then if it does, just kind of tuck it away and come back in a few years and be like, oh wow, I have some assets now. That is a really good thing. That's what I want you guys to have. I want you guys to have assets because owning assets, people are going to talk about how the Fed is printing money. Yes, they are. That money is finding its way into hard assets and ownership in companies which buy and sell goods, services, economic producers. That's why I like stocks better than crypto, honestly. Crypto absorbs wealth, okay? It doesn't create it yet, but it doesn't. It doesn't now. Okay. All right, get the symbols in. PayPal. I do not like PayPal. Let's see if my prejudice is correct. Okay, all right. Your PayPal is going up. It's trending on the weekly. All right, you're fine. All right, you're fine. PayPal's fine. That is an Ichimoku breakout. That's okay. All right, so let's see where we can go to. I mean, I talk about wanting to own things like Intel, which are at like multi-decadal lows, and then I'm kind of poo-pooing PayPal. Look, I've got my own biases. Okay, it's just been down so long. I've been kind of sleeping on it, but that looks good. That looks all right. I just don't have a fundamental opinion either way on that. Intel, I don't have insider information, but I do have this really, really, really smart buddy. Okay, like you guys probably have a friend like this where you have a friend that they can probably build a nuclear reactor themselves if they just had the fissile uranium. They're that smart, and he is a massive Intel R&D technologies talking about their Sandy Bridge. I know that's an old chipset, but it's going to be this like 25th generation processor, blah blah blah. I'm like, cool, dude. Like, how's that going to translate into business? He's like, well, I don't know business, but I just know these are best processors ever. I was like, okay, all right. And so he kind of like he's in my ear talking about how great the future of Intel is. Sorry. Beyond the scope of what I can consume about tech. And so he's kind of my heuristic. And so that makes me go and take my technical expertise and find 2159 and at a 12-year low and be like, okay, sounds like a deal to me. Because, yep. And that's kind of how my thought process works because I'd rather play video games like Valheim than sit there and read about the architecture of silicon-based chips. It's just a personal preference of mine, honestly. So a little lazy in that regard, I guess. All right, volume profile on Coca-Cola. Okay, let's do it, and then let me circle back to Wald's other things, and I think PFE going. Yeah, it's going back and Curiosity Stream. I gotta do Curiosity Stream because I think you asked actually last week. Sorry. Curiosity Stream is I've actually watched I've actually consumed a little bit of content about Curiosity Stream and how they seem to be a business model that is being tried, which if you guys don't know, Curiosity Stream is it's not YouTube, it's like a paid like subscription service. Which I mean it sounds good and everything, but the problem is with content is most people want to get it for free. I know I do. And that's it's kind of hard to get money out of people, especially with YouTube out there. But anyway, 60.22 is this what you're looking at, Coca-Cola? Your short PayPal. I disagree with that, Jen. I disagree with that because when you're shorting something that's at like a multi-decadal low, how much? Well, I mean, you could get more out of it. So, all right, all right. Let's finish these up. I'm starting to lose my throat. Curiosity Stream. I know I gotta look at this thing. So, Curiosity Stream. That's another one of these things. Um, it's trending on the weekly. You know, it is starting to recover. I bet they've been probably having some pretty good news. $2 stock. Um, at let's see. Let's now. I like that it did a really good 50%. This is on a weekly, all through 2024. I really wish I'd been looking at this, earlier on. Really and truly, look at this. And then you have another 50% pullback at 173. I like it. I think that you can probably pull out a pretty low risk setup here. Like it's a penny stock, it's low numbers, could have a lot of upside. 173 is your support. Let's do a quick volume profile on it. See if that all matches up. You kind of got that. It's more down there. I mean, so really, $1 and 173 are the key levels there. Hold this 173. This thing could go up very much. You have a nice test of it yesterday. Looks like it was earnings, and it survived. It survived. Yeah, I actually kind of like this. I actually kind of like this a lot. You know what? If this was, if this would be something that I appreciate you actually. I really wish I gotten this earlier on because then you asked this at sort of the beginning of the live stream. Let me just tell you here. Just talked about it around the let's see, maybe it's the 1 hour 5 min mark. I like it. In case you're going back and seeing it again, I do. And so this would be an example of something where if I had that account set up, I'd probably throw a small position on this just to see what happens. Really and truly, this would be my live stream ideas trade because I'm not responsible for that. You guys came to me with this stuff. I'm just taking it because it fits my rules. And you know what? If I take enough of them, they're going to work because 50% do work. All right, so let's see. You also may look at Siemens, SHL, Siemens Health Engineering. It's a German one. Don't really see a clear 50% setup on this. All right, I got to finish this up. Been talking and, yeah, like I said, I think I'm getting a cold. So, let's see. HFG, Wald. HelloFresh. Yeah, okay, so I assume that's HelloFresh, HFG. You like your recovery stories, huh? In this case, what I would look for is I would look for a pullback to a 50% of this recent move up. And so 784 would be a good one there. Let's see. And we talked about Pfizer. We talked about Coca-Cola. SMCI, Coffee Guru, one of my very productive idea generators. Wait. SMCI, sorry. Super Micro. So yeah, so this has been a constant question over the last several months, honestly, as it has done the, I need a soundboard, dum dum dum, valley of risk. What is the valley of risk? The valley of risk is something where you have a stock or an asset or anything where you hit the 50%, you know, that thing that I say really works a lot. It does, but if it then begins to fail, you need to get your butt out of it because now you enter into the valley of risk. So that is why I call this the valley of risk, because you don't know. So imagine a dark, foggy valley where you don't know where the bottom is, and you can't see up to the top. So once you're in a stock, you're bag holding it in the valley, you don't know where the bottom's going to be. And that's why you end up with something like this, where people maybe try to catch the knife here, whoops, catch the knife here, whoops, catch the knife, and you're just in the valley. So you always want to kind of avoid that. But now you've come down to this little region right here, and so you have a reason. You have a reason to stop. What I would do, let's look on the daily. I think I already did a volume profile of this region right here, and honestly, it's still just not enough. I mean, what I want to see in this case, this is a daily, I want to see this red line, this Tinkinson come down, okay, and I want to see it hold a 50% of the move up and then do something like that. So see if you can get a little 50%. That Tinkinson is probably going to move down. This is how many bars? 1, 2, 3, 4, 5, 6. So you probably got next week. You're probably going to see this Tinkinson start to move down, and maybe give price a chance to get over it, hold, and then that would be a pretty good setup to try it. So we're getting there. We're getting there. I'll give that a try. Give it a try. Hashtag not financial advice. What was that other one? What was that other one here? Oh, excuse me. Yeah, Jen. Giggity. What was that other one we were looking at? Oh, it's Curiosity. Was it? Yeah, Curiosity. Curie. May have missed that, but we'll see. All right. Well, everybody, thanks for hanging out on this Friday. I hope that going into this week, you are long all the things. This is why I say try to buy shares, try to get on base, use low risk setups, and then try to hodl as long as you can, because no matter who takes over American politics, market will, with the highest probability, go up. So trade wisely. We'll see you guys next week. Bye-bye.